Hello everyone, George DeSantos here with the Look at the Market for the week ending Friday, August 24th, 2018. Let me remind you first of all to take a look at the disclaimer and to realize that this is not intended to be investment advice because I'm not a professional investment advisor. It's simply a discussion of markets and I've done it mostly for myself for selfish reasons because it gives me a roadmap to follow for the coming week, and then I share it with those of you who would like to take a look. So let's begin by looking at the S&P, the weekly chart of the S&P 500. So here's a TC2000 chart of S&P 500 weekly. We can see that the trend lines, the 4, the 9, the 30, are all above each other in that order. And so insofar as moving averages are concerned, I meant moving averages, not trend lines. Insofar as moving averages are concerned, then the trend is up. Now, some time ago, we had this ABCD triangle here, computed the target of 3,094, and we may very well be on our way to that target by the end of the year, as many commentators have said. Now we've made a new high, as everyone knows by now, of 2874.69, and so we are making new highs on the S&P, the Dow, and the Nasdaq. Nasdaq made a historic high before the Dow and the S&P, and as many people say, you know, the Nasdaq tends to lead the rest of the market. So it was foretelling what we might have expected. So here we have an uptrend according to the moving averages. This is the 50-day moving average, and the other indicators such as MACD are in bullish territory. MACD is in bullish territory. Now last week I wrote that Larry McMillan is concerned about this becoming a double top. And I won't be too concerned with it unless we find that we can't breach this high here on the MACD histogram. So we're still, you know, in some cautionary area here. In other words, we need to see this MACD histogram get to a higher high if we make even higher highs. So we'll keep an eye on that. But the other indicators like RSI 12 and Williams percentar and the sum of the rate of change indicator, they're all trending up. So we're in a bull market. We continue to be in a bull market. And except for this pullback here, when the market became very overbought, you see how it hit the upper Bollinger Band? That's when you expect a pullback. And we did get that 10% or so pullback. Let's take a look at the daily chart. Now on the daily chart, we can see just as we saw on the weekly, that the 4 is above the 9, 9 above the 30 moving average. The exponential moving average on the 4, the 9, on the 30 is, as you know, it's a forward weighted moving average. So the moving averages on the daily is also telling us this trend is up. We have a nice bullish candle here. MACD, on the other hand, is showing us those signs of possible bearish divergence. If we drew a line here, which I'll do live, if we drew this line here, especially when we drew it from here, okay, you can see that as we drew the line on MACD, we have a bearish divergence on the daily chart. So that's why we have this cautionary note from Larry McMillan and others. It's possible to see a double top here. But until and unless we begin to see any additional signs of that, I'm fully invested. We'll see how it goes from here. But let's move on to something else. So we'll now look at some charts from stock charts, ones that we've seen before. Here is the chart of the new high, new lows, 5-day average. And so you can see that we are now above the 200 and the 50-day moving averages. So the new high, new low index is telling us that this market is still very bullish. Let's take a look at something else. We can see that we have a green bar on the impulse indicator here. This is a daily chart. And if we look at a weekly, we also have green bars. 2 weeks in a row, we've had green bars. And we can see how MACD is trending up. You can see that lower histogram on MACD that we're going to keep a close eye on. Another chart we want to look at is the McClellan oscillator. And the McClellan oscillator on a daily chart is in bullish territory. It's trended up. We were all the way down here before, now we're up here. So that's bullish. And this indicator that we've looked at before, which is the percentage of stocks on the S&P 100 above their 200-day average, moving average, is now at 67. Remember, we were all the way down. If we look at the weekly chart, which is the one we've looked at most often, where is the weekly chart? It wouldn't give it to us. Anyway, we are up at 67. So on the the percentage of stocks of the S&P 100, we're in very bullish territory here. Let's look at S&P on best choice. You can see that since we made this low here in July, in early July, we've trended up. And so we're meandering between the 50% line and the 90% line. It's possible we have a little pullback like we've had here, but even if we do, we seem to be inclined to go even higher here. We're at the 83% extreme here, so we have a little ways to grow. And let's take a look at the seasonal. On the seasonal, you can see that if you examine from September all the way to the end of the year, we do have we have a bullish period from September all the way to the end of the year. The market tends to give us this upward movement. Excuse me. Now, last week I mentioned I sent you an email on the webinar by Jim Cramer and Mark Scheiken. And here's what the software looks like. I got their permission to show you this. I checked with them if it's okay to do this, and they said fine. So now here's what the screen looks like with Scheiken and Analytics. Here's the spider, which is the ETF of the S&P. So you can see what the S&P looks like. This is a 200-day moving average. This yellow line or brown line. The dotted line in the middle here is a 21-day moving average. And you can see that it's above both, price is above both of them. So the trend is up, of course. You have this channel that is proprietary to Scheiken Analytics. And here are their indicators in the bottom. Since it's an ETF, the power gauge does not give you a rating. But you can see that the relative strength indicator is bullish. You can see that this oscillator, which I like very much, is overbought, oversold oscillator. It was oversold here, right here, at this point here. And of course, the market rallied. It became a little oversold here again, and the market rallied again. Take a look at some of the previous oversold in areas, and you will see that the market rallied from them. Okay, market rallied from these oversold areas. This is something that I love. I love this area. This you can use for short-term trading, or you can see all these areas here, all these oversold areas. We're giving you buying opportunities. Now above this oversold, overbought indicator, you have the Scheiken money flow. Money flow is positive insofar as the spider is concerned. It's somewhat overbought. So as I mentioned before, we saw that it was approaching the overbought level. We might get a little pullback, but it shouldn't be of concern because we do have a nice uptrend. In any case, these indicators are all showing us that this market is bullish. I'll show you some individual stocks on Scheiken, or Shaken as they call it, and a little later. Now I'm sure that you can go to the website Scheiken Shaken Analytics, and get a walkthrough of the program. But let me point out what I've done with it so far. I've only been looking at it for about 2 weeks. After Mark Shaken mentioned, I keep calling him Shaken. Anyway, after he mentioned Marathon Oil in his discussion with Kramer, I said, let me take a look. So here's a chart of Marathon Oil. The first thing let's take a look at it from the bottom up. The shaken power gauge is bullish. In fact, very bullish for Marathon Petroleum. Very bullish. Then on the next indicator up, relative strength is up. In fact, it pointed out a relative strength breakout here. I had already bought it before it gave you this breakout. But on this indicator, the overbought, it was oversold, and money flow was still high, was still positive. So I said then, okay, this looks like a nice one to take a closer look at. So now I go to the market timers, which is really best choice, and I say, okay, what is the seasonal play on this? And it turns out to be October 25th to November 8th. But it starts somewhere at the end of September, the seasonal play. So I said, okay, let's take a look at the extremes. Now on the extremes, I find something really interesting. The earnings growth rate is 216%. This is a 6-month chart. 216.2%, whereas the price growth is only 23%. You've heard me say that with best choice, we are going to anticipate that some's got to give. Either earnings is going to come down to match price growth, or price growth is going to go up to match the earnings growth. I like that. And when you look at these other indicators, the typical RSI and so on. So what did I do? So I decided, well, I'll buy 500 shares is all I could afford to buy in my cash account. If we continue to take a look at some of the other stocks I own, and we've talked about so often, yeah, it's neutral. Apple is neutral. It's a neutral rating. It was bullish, it was bullish, it was neutral. It keeps going from bullish to neutral and back and forth. But let's look at the other indicators. If you look here, you'll see, boy, this relative strength is high. It's becoming oversold on this indicator. This indicator, oversold, overbought, is not just RSI, it's not just stochastics. Apparently, it's a combination of some of these oscillators, and it's pretty predictive. Look at it here. When Apple was at this level, it was a buy signal. When it was at this level, it was a buy signal. When it was at this level, it was a buy signal, and so on. So it's uncannily accurate, I think. And if you look up here, well, of course, we know the institutions are buying Apple. So even though it's also overbought here, according to the channel, I'm still holding it. Let's look at Salesforce, CRM. On Salesforce, if we went from the bottom up, as we usually do, Shaken power gauge is neutral. But I bought it before I started using Shaken. Relative strength is very good. In fact, it looks like it's ticking up. It's overbought, but notice the institutions are continuing to buy it. It might pull back because it's hitting the upper channel here. But again, if we go to the CRM, to best choice, we'll see that the channel is pretty narrow. So I'm not inclined to sell. I want to hold these things for a while. I could also day trade them, or trade them short term, such as a swing trade. But I like for the longer term here as well. All right, folks, just about running out of time here. So I hope you find this interesting. I don't get a commission from this. from Shaken. They don't pay me, but I just love the software, and I suggest you might want to take a look at it. Have a great weekend.